The following is a presentation of TFNN.
Good afternoon, folks. Welcome to our May 23rd edition of the Celestial Charting webcast. Hopefully everybody out there is having a great day. And today is certainly a battle between the Bulls and the Bears. There are two trade alerts that I sent out earlier, probably about two or three different, at least three different emails that you got. So you'll go into those trades in a moment. Currently, the Dow's off about 94 points. S&Ps are off 8. Composites off 14. Small caps are down about 3 points right now. So this is our May 23rd edition. For everybody that attended the workshop last Friday, buying and selling the D point, thank you very much. The archive of that workshop is now on your members page for your review for the next 30 days. And again, thanks for all the support out there. I do not have the dates for the next coming couple of months. They will be, as in the past, every other week. So May 23rd, that is the current one. I'll update this chart here the next time around. But the next, if I'm just looking here at my calendar, the next webcast is going to be 2 weeks from today. And if my calendar would pop up, I would tell you what that date is. Let's see. It's going to be June the 6th. So June 6th will be our next webcast at 3 p.m. Today, the things that I'd like to be able to cover with you, I want to take a look at the current lunar and astro cycles that we're in and those that are on the horizon. Take a look at the ES Mini, which was completing a pattern and a couple of bullish candle signals that I used to as one of the factors in going ahead and entering the trades, the two trades that we're in right now. So we'll take a look at the ES Mini, take a look at the two trades, why I selected those two for the time being. This is we're playing a bounce here. I don't know if the bounce will last a couple of days through Friday. We may carry it over the weekend. We'll just have to see what type of action that we get. I then wanted to share with you a little bit about some sacred geometry. I have been working on a special study, and I wanted to review that with you, and that's taking a look at a 50-day and 200-day exponential moving average. From time to time, I have mentioned this to you and shown this to you. We're going to go back and take a look at the actual Dow, and then we're going to take a look at the actual financial study that I've put together on it so that you can see what the results are. I still do believe, even though we're going long the market at the moment, we're in a long-term bearish cycle. And then, as always, questions and answers. So the current lunar cycles that we had that came in, we had two of them on Sunday. We had the solar eclipse new moon that came in on May the 20th. And along with that, on the Saturday, we had apogee. And this is also another aspect that I have planted on the S&P chart, the 30-minute chart, and you'll see when we get to that one of the reasons why I went ahead and took a long position. The next next lunar cycles that let me go back here. Also, what has been sandwiched in between those two lunar cycles has been May 18th, which was a 2 planetary index day, and then yesterday on Tuesday, a 3 planetary index day. And those are unusual for those of you that are new to P-index dates. This is the table that's included with the newsletter. It's a study going over a 300-year period, 1800 to 2100. And this data is taken from the Daily Aspectarian. I'll punch up that page here in a moment. And it's really a study of how many planetary alignments are on each day. And the system that I have went through and took a look at 109,938 days. And if there were, in our case here, we're taking a look really at this column here, ET, original P-index days, and a 2 planetary index day. Folks, 497 of those in a 300-year period. However, if you come over and take a look at this right here, which is ephemeris time with all the new aspects, the work that was done originally in this column here by Dr. Ruth Miller and Larry Pesavento, did not contain all of the planets that are now contained inside the New American Ephemeris. So if I go back here and what you'll see is ephemeris time with all new aspects. The day that came in on the 18th, Friday, is a very important day for us to mark, both from a long and from a short standpoint. With regard to P-index dates that are left in the calendar year, we've got June 18th is going to be the next P-index day. I believe we also have a newer full moon a cycle. Well, we'll take a look at that in a moment. The next 2 P-index day, though, that we have is going to be October 6th, 2012. So I expect we'll have continued fireworks in the marketplace. If we take a look at the next cycle that is coming in, it's going to be June 4th. And June 4th, we're going to have a full moon lunar eclipse. That's going to be on a Monday. I suspect that after this bounce, that what we will see is the market will move down into that June 4th time frame, then probably up into the June 18th time frame, the June 18th time frame being the Monday that we have another 3P index date. And so it looks like to me that is the current setup. Of course, we'll just simply monitor things one day at a time. The June 3rd is going to be the next perigee phase. So June 3rd, you've got perigee. June 4th, you have the full moon. So another back-to-back set of lunar cycles. And again, the data for the planetary index is coming from the Daily Aspectarian. That is at the bottom of the New American Ephemeris. And you can always get a copy of this by contacting StarCraft Publishing. And there's the phone number for you. So what I'm going to do right now is I'm going to switch over to the live charts, and let's take a look and see what it is that we did and why we did this. So most of the decisions that I'm making are really based on the buying and selling the D point and taking a look at what is going on inside the ES Mini. And it's primarily the 30-minute. I'm looking at the 30-minute, the 10-minute, and the daily chart to take a look at where we're at. If I move this back just a little bit here, what I've done here for our purposes today, and I'll include this in tomorrow's newsletter as well, is I've marked really the key either planetary or lunar phases and when they have come in, or mark the lows for the time period. So what I mean by that is that yesterday or Monday we had on the 22nd. Today's the 23rd. So it's the 22nd was the. Let me a second here. Doing too many things at two. So we had on the 22nd. Yeah. So yesterday we had a P index day. Good. Let me pull the chart back up here. So we had a 2P index day, and what I've done here on the ES Mini is I've just simply marked the high of the time period. That high came in at 11:30 on the 30-minute chart. On the ES Mini, that came in at 13:26.50. So that's a very important point, in my opinion, for us to take a look at, either if that gets taken out or if we come into it, if the market comes into it from a resistance standpoint. What I also have listed here is the low of the new moon solar eclipse. I also have the 2P index date that this red line here is going across. And then what's really key and what's really critical, and I've shared this with you folks before, but you can go back and take a look at some of the archived celestial charting webcasts where I have numerous charts on taking a look at apogee and perigee. I am in the process right now, and it'll take probably about a month or so going back through each of the celestial charting, these live webcasts that I do, and creating an index of what's contained inside it, so that you'll be able to go back to a specific webcast if you're looking to re-educate yourself or take a look at something that we discussed then. So I will have a table of contents, if you will, for the right now. There's about 23 hours worth of education and training, and that way you won't have to go through each one, and you'll be able to identify approximately what might be contained in each of those sessions. And one of the most reliable lunar phases is apogee and perigee for trading the markets, and it especially works out well on the ES Mini. And you simply can be paying attention to that for those of you that are trading intraday and trading some of the double, triple, or single ETFs out there. And in this case here, apogee took place on the 19th, which is on a weekend. The actual close on Friday happened to be a price point of $12.8975. The actual open on Sunday happened to be a price point of $12.9175. So very close. What I've done is I've identified the line here for the open on Sunday evening. So with the price being within a buck or so of each other, we have a pretty good line of demarcation. Now, so what we had here occur today in the ES Mini was we had an A to B equals CD down. We had a 1 to 1.272 A to B equals CD down. And as the euro was getting crushed, and still is, and we'll take a look at that, as the euro was getting crushed, our markets were fairly resilient. The ES Mini was complete in a 1 to 1.272 pattern. Although I typically look for a bullish engulfing or a hammer candle, there are other candles that are out there. There are other bullish candles that are out there that I have shared with you. This one right here is called a piercing pattern, and it is when the candle doesn't complete a full bullish engulfing, but pierces into at least 50% of the body of this candle. So as it was making a 1 to 1.272, and when we got a close a little bit higher here at 1:30 in the afternoon, that is when I started taking a look at going ahead and taking a trade, having completed that pattern, having had a bullish candle sign. And what we have had occur so far since those alerts went out is we did have the market move down into the 2:30 time frame, from 2 to 2:30, and that was actually a beautiful thing, because what we have done up between 2:30 and 3 is we've created a bullish engulfing. So my preference of candles was the bullish engulfing. Based on other things that I was looking at in the markets, I went ahead and pulled the trigger for us on a couple of trades that we'll get to. So we did have a bullish engulfing. If we get a close above the 1306.75 in 14 minutes or so, as soon as we get to the 3:30 time frame, we will have some confirmation that a bounce could be underway. So it was the ES Mini chart. It was buying and selling the D point, and that is really exactly what I did. So let's go take a look at the currency pair, that the euro-US dollar currency pair. Now, when you take a look at my chart and you take a look at these candles, the time frame, this is the weekly chart that we're looking at, and this is really a critical chart. And I was pointing this out in this morning's newsletter. And what's critical, what was the number? Which number, Angie? So in the newsletter that I was pointing out here is on the euro US dollar for the ES. Let me go back and answer that question for you so you can write it down. I'm looking for a close above 1306.75. That was the close on the candle session that ended at 3 o'clock. So a close above that would be the type of confirmation that we look for on a bullish engulfing. So root for it, if you would. And just kidding. Whatever happens, happens. So what we're taking a look at here is the weekly chart on the euro U.S. dollar currency pair. And so it's really it's one of those times where your back is totally up against the wall, at least the way that I take a look at things. And this swing point here is a very important low. August 25th, August 26, 2010, has held both in our markets as a very important swing point area. It is a two planetary index date, both a 3 and a 16. 16 or 15, I have to go back and look. But a back-to-back, which you typically don't have. When you do have those, they are very important. And so what was interesting this morning, as I was certainly laying things out, knowing what we've just come into between yesterday and on Friday, with a 2P index date and then a 3P index date, all coming together in the same range here. If there is a close below the 1.25861, and you can see we're trading below that right now. However, this chart here, the way that the currencies are trading, my opens and closes are on the midnight time frame. So I just simply had to make a call based on other things that I was reading inside the charts that I was taking a look at inside the charts, which was really the ES Mini giving us a signal of going ahead and buying that D point, and that's what we did. What we'll be looking for in the morning and tomorrow morning's newsletter. Now, this is a weekly chart, so we have to also understand that this chart really doesn't end until Friday. But what I would certainly like to see, since the market is down in this area, I would like to see a rejection of that price point this evening. The sooner, the better. And if there is a close below that, and I suspect there will be at some point in time, when we do close below that, we've got, in essence, four fairly key planetary index dates that are going to suggest to us that, much, much lower prices are coming, not only in the euro, but certainly in the U.S. markets as the correlations are out there. And when I take a look at the 30-minute chart, there was a bounce that did begin earlier in the trading session. It also has a bullish engulfing candle right here. I was noticing this bounce. This is the price point that I would like to see it get above 1.25861. When we take a look at the, I'm going to go ahead and take a look at the trades that we're in and review that for you. The first one that I'll go take a look at is Potash. POT is the ticker symbol. I was not instructing you to do anything other than go out and buy some shares of POT. Now, although this gets fairly small on your screen, I'm going to go back here and I'm going to blow it up. But what you can see here on Potash is you can see that it had a huge gap up that has been filled. That gap up, and take a look at the volume there, you had 142 million shares. Now, what I'm using as the completing the gap is the candle going back here to August 6th. That's at least what I have identified there, and I've got some volume there of 31 million shares. So that's the area that I was taking a look at, and now I'm going to pull forward here on the screen. So that is the red line that is out there, 142 million shares. You can't even see it here from a volume standpoint, but that is the area that is being tested today, and as we speak right now, it's being tested on 4.9 million. What I was also taking a look at is this candle right here today, 4.9 million, was being troughed in monthly and trough F on. Thank you, XXO. When I was taking a look at the today's candle, also the low was 38.31, and that was going against the most recent swing point out there, which is December 15th. That has 7.4 million, as you can see. So ideally today we get a close above 38.42. It's at 38.97 right now, and it looks like it has. And it completed also today, completed a 1 to 1.272, A to B equals C to D. The price projection on that, which you can't really see, 38.40, and where it actually got down to was 38.31. So here's two trades that we are into in buying the D point. And this one here specifically, also as I take a look at the B point here, which was on this most recent A to B equals C to D on April 16th, there was 5 million shares there, and as it came through with 3.5 million shares. You did have some volume pick up a little bit, but nothing so substantial as it got through the B point that will suggest that it will be tough to make a bounce from here. That being said, our price target happens to be this high volume candle right here, and the bottom of it is 43.80, and we'll just simply assess this trade here. And again, we may only be in this trade for a couple days. We may stay in this a little bit longer, but we should get a decent bounce out of here. It should pretty much, as the market looked like everything was going to go off the cliff, we could actually end up green today, and that would kind of positively freak some people out, I suppose. We'll see what happens, though. Whatever happens, happens. So these are the reasons why I went ahead and took the trade on potash. And so you can see here, even though it's hard to maybe read everything, you get a pretty decent idea that this thing is up against some pretty good support on this chart right here. So that was on potash. When we take a look at the reason to go into the TQQ trade, let me put the actual chart up. I'm going to put up the Qs first, QQQ. And the Qs were it was a toss-up today between the Qs and the small caps as to which one that I chose for us to go ahead and go along. So it was either going to be the TNA or the TQQQ. I chose the Qs because simply they were showing the most amount of strength today as the market was pulling back. When I say that, I mean also from a volume standpoint, the volume was relatively light. So far today, it's done 46 million shares, and when it was going into the bottom, it was going in, when I say the bottom, the next B point, which is May 18th, that had 80 million shares. So ideally what we'd see is a close on the Qs here above 61.96, and it's trading above 61.96 right now. So we'll have rejected that swing point, even though it didn't test the bottom. We'll have tested the top. We'll have rejected that swing point on lighter volume, and which would be good to help set up the bounce that we're looking at. Now, what I've identified as a price target for us is nothing more than the bottom of the 20-day moving average, the 64.54. I'm sorry, the 63.79. However, 64.54, which would be the 50-day, which is also, if we take a look at, so I got the 0.382, and we've also, so this is really our range. Right inside here is our range, and we'll just simply assess it on a day-by-day basis between today, tomorrow, and Friday if the market does continue to bounce from here. So really the trade in TQQQ is going to be based off of this chart here. I will go ahead and pull up TQQQ because it's not a dollar for dollar. So let's pull that up here. And actually, also, I'm going to put up the Qs here one more time. So when I was sending out the email, I was also waiting for an additional signal. Let me go down to the 10-minute chart, I believe it was. So on the 10-minute chart here, I was waiting for the 9-day to cross over the 18-day EMA. It's a much faster moving average, and that came in here at about 150. When that crossover, you can see 61.73 versus 61.72. So based on what I was taking a look at in the ES Mini, the S&Ps, taking a look at looking as if the euro was beginning to reject further lows and was going to bounce higher, and the decision was the Qs to go long or the small caps to go long, and both of them had the 9-day crossing over the 18-day. At about the same time. Actually, the small caps crossed just a few moments before the Qs did. So this was the other trigger that I used in order for us to have gone into the long trade. So I'm going to go switch over now to the actual TQQQ for us. That is this chart. So our actual exits so far, and let's go ahead and take a look at the ideal bounce would be a 0.618 of the A to B equals CD. So we'd be taking a look at the ideal bounce would take us into the 5501 area. But it's possible we will only see the 52 price point. We'll just simply pay attention and watch as it moves up into that range. So that is on those two trades, the reasons why I went ahead and took those trades. And are there any questions about either of those trades that I can answer for you? Okay. Would this be a more bullish? Okay, so I'm going to go ahead and pull up the Qs here and see if I can follow along. So you want me to pull up the weekly chart, and so that is what I will do here, and pull up the weekly chart, and would this be more bullish on the weekly and the Qs getting over 64 area? The 64 area. So I'm not, I'm maybe just a quick, maybe just one quick comment as opposed to the 64. What should I be looking at on the 64? And Angie says Stephen went with the QLD versus that's fine. That's great. And obviously juggling a number of things today, wanting to get these trades out to you as well as completing the presentation. So hopefully, like Angie's familiar, the TQQQ really gave you a couple of different options. You could have gone long the Qs. You could have gone long the QLD, which is the double. And so and the the other problem was the position size calculator was down. The data feed coming from the position size calculator is coming from Yahoo Finance, and Yahoo Finance is down. So I simply had to do some quick manual calculations and to get that information out to you. So XXO getting over 64. At this stage here, the everything that I'm taking a look at, I don't see any reason to be bullish. I believe that there's still further prices to the bottom. But look, I'm open. For me, it'll really come down to this chart right here on the weekly basis. It will be what type of bounce can the euro get? The problems over in Europe are not over with, and so the dollar on a week from today ends the month, I believe, right? So a week from tomorrow, May 31st, and when we take a look at the dollar index on May 31st, what we are likely going to see is a breakout, and this is the monthly chart here, a breakout of this long-term downtrend that goes back really to 1999. When this actually started. So we're talking about a one heck of a 13, 14-year time frame with the dollar being in a down channel, and this will be the first close above that channel unless there is some huge pullback over the next couple of days. So until the market makes a change in correlation between a strong dollar then creates a stronger market, I think we have to absolutely be aware that what we're also is that the dollar's going to get stronger, the euro's going to get weaker, and we'll play that correlation. But the reality is, my approach is to always take a look at the charts, see what they're saying, and go ahead and trade the charts based on what it is I'm looking at, and leave my opinion that I might have had 10 minutes ago at the door and just simply trade the chart. So with regard to for me, bullish or bearish, it really doesn't. I don't take one side or the other. Just what does the chart pattern show us? So interestingly enough, as I wasn't really paying attention to the screens here, I see that the composite has actually turned green. The small caps have turned green. And let me go see, what about the NDX? Has the NDX turned green here? The NDX has also turned green. So there you go. You got to love that, folks. Okay, so if we let me get back to these charts here. As we take a look at the ETFs out there. So again, as I was taking a look at things, the Qs had retraced the smallest amount. If you can see the Qs in the bottom right, you can see the small caps here in the upper right here. So that had pulled back all the way into the swing point from a few trading sessions ago. The diamonds here testing the which is for the Dow, testing the swing point for May 18th and doing it on lighter volume. Now, coming to the close, there could be some substantial volume in the last 5 minutes, but certainly rejecting that area. And the SPYs almost all the way down. So I just simply from a retracement standpoint, and the way that Apple was trading today, simply chose the Qs as our vehicle to play the bounce. I had been looking at the TYH, the XLK sector, and the XLK sector, the technology sector, I should say, via the XLK, which is right here. And this was the other that I was looking at, and this also is strong. This having from the lows in August 19, 2011, all the way up to the highs I put in, only have retraced down to the 0.382 area. So this was the other possible trade that we were looking at. If we just take a quick peek here at gold so far is also rejected the lows again. So it came back and it tested the lows from September 26th out there. So now we've got 4 tests of that area, and it looks to me like it's just going to continue to hammer away at that. I'm going to go back to the rest of the presentation, switch back over, but first I'm going to switch over to the ES Mini, and we can see that we did have confirmation of the bullish engulfing candle with the close during that session that took us into 3:30 here. So so far, all looks good out there. So I'm going to switch back here to the presentation, and like so. Okay. Switch through these things here. Okay, so sacred geometry. I wanted to cover sacred geometry for you because you often hear me talk about 0.618, 0.786, 0.382, 1.272, 1.618. And so I wanted to describe to you in a quick, easy fashion without too much of the history why it is that we use those numbers. And they are all coming, as you know, they're referred to as Fibonacci numbers that I refer to as sacred geometry. And it's using the Fibonacci summation index. And what that is, folks, it's really a set of calculations. And the way to easily describe it so that you can see what is going on here is if you just simply start with 0 and add the number 1. And then in this case here, 1 plus 1, that equals 2. So if you just simply add the prior number, so 2 plus 1 is 3. 5 plus 3 is 8. 8 plus 5 becomes 13. 13 plus 8 is 21. 21 and 13 is 34. 34 and 21 is 55. So if you just continue, so off to the left here, I put what the actual calculation was. Whoops. There we go. What the actual calculation was. And then here is obviously the result. And so if you just continued on doing that down here, this would be your number sequence that you would get. Now, if you just simply have got two columns here, one, you're going to divide the previous number by the current number. So you're going to divide this one by this one, or you're going to divide this one by this 2, or this 2 by this 3, or this 3 by this 5 by this 8, this 8 by this 13. Once you get here, what happens is you start to get to 0.618 all the way down. So 13 divided by 21, 0.619. 21 divided by 34, 618. And you always end up with 0.618 here. Likewise, if you divide the current number by the previous number, that's what I just did. Sorry, I had that reversed there. But so if you simply divide the current number by the previous number, as you get down to the iteration, it gets you right down here, the eighth, with 1, 2, 3, 4, 5, 6, 7, eighth iteration. Then every time that you do that, you will end up with 1.618. So 618 and 1.618 are our bases, our focus, if you will, and in what we, is our baseline where those numbers come from. Then if you take a look at those numbers, 618 and 1.618, and you do the following. If you just identify the square root of 0.382 happens to be 0.618. That is where the 0.382 number comes from. And 786 happens to be the square root of 0.618. So these are the three retracement numbers, contraction numbers that we use. Other people use 0.50, and you certainly can. It just doesn't happen to line up with any sacred geometry Fibonacci number. And just the same holds true when it comes to expansion. So if we started with 1.618 and you just simply took the square root of 2.618, that is what 1.618 equals. This is a very large expansion, and you'll see that. Oftentimes, you'll see some of my charts where it's showing measurements between swing points. 1.272 happens to be the square root of 1.618. So here are the six Fibonacci expansion and contraction numbers. The only additional one that I would add to that would be pi, which would be 3.14. And 3.14 is sometimes something that is overlooked. I overlooked the expansion of pi when the market made its high on May the 1st this year, and we took a look at the ES Mini, and I had sent out a video alert to you showing that it actually had made that pi and looking for a candle signal reversal, which we didn't get a candle signal reversal, but we did get a market reversal. And so the next time that I see pi, folks, and if I send you a video alert and I don't have us changing direction, please call me immediately. I don't usually make the same mistake twice. So here are the retracement numbers and expansion numbers that we use. And if I go back to the charts out here, let me do that. Go to the live charts. And so if we go to the live charts, what you'll see here also then as we were, if I go back to the ES Mini, the 30-minute chart here, from the low that was put in, so this new moon solar eclipse low that came in on the 20th, all the way up to the 3P index day on the 22nd, what we'll see is that we were making, or the market was making, an A to B equals CD as it was coming back to a 0.786 retracement area. So 1 to 1.272, you know that's one of the numbers that we use. You can see this price projection is 1394, 1393.75 really on the ES Mini, and where it actually got down to was, 1293.75 in essence, and where it actually got down to was 1294, and then it made this piercing candle. You had a confirmation with a higher close. Market pulls back, bullish engulfing confirmation, and now it is off to the races. Now, very possible that the likely extension on this here is a new A to B equals CD pattern. This would be our A point down here. This would be the 1287. The B point would be this high. This would be our C point. And so just simply a 1-to-1 A to B equals C to D on the ES Mini, this would suggest that the A to B equals CD would be 1333, and the 1 to 1.272 would be 1344. So right now, as I would be taking a look at analyzing the ES Mini chart here, 1344 would be my target. And the reason that 1344 would be my target is because of how the ES Mini is now moving off of the C point. So it's moving off right now with conviction, and this says to me that our first target area for us to be focusing on is going to end up being 1344. Now, one of the other reasons why I went ahead and went long, again, is that apogee and perigee, because as this market was moving down into the ES Mini and it was making the 1 to 1.272 A to B equals C to D, we were still above apogee. So we were still above that line, because you want to have this line drawn in if you can. If you do have the ES Mini feed on your chart, you want to have that there, and you want to take a look at being long when the you want to take a look at being long when price is above it, and you want to take a look at short when price is below it. And if you use just that one tool for trading, you would be doing extremely well financially. So on the ES Mini, it looks like that is where it's headed to. Now, after the market closes, it'll drift sideways for a bit. But with the U.S. markets right now, the only thing that is in the red here is the Dow. So, and I'm sure it's just a matter of minutes before the Dow goes green. So the U.S. markets will be leading the charge here on the bounce. It's really the European markets when it comes to the currency side of it that will be leading the market. And so right now we're already getting above the 1.25861. We're right now at 1.25861. I'm not sure how that happened, but it did. And so now it's just 4 ticks above that. So that's really the positive sign that we're looking for, is the euro to reject this area. And again, we'll assess it one day at a time, because perhaps this bounce could be even larger, because this area here is truly very, very critical area. And right now, at the moment, it's acting as support. But we're not going to celebrate until we're out of the trade. So when I take a look at sacred geometry, what I'm really talking about here, I'm going to go ahead and put up a chart. Let me just close everything out here. And I'm going to just simply put up the SPYs. Not for any reason. Well, yeah, I'll put up the SPY. And I'm going to blow this chart up here. Now, this is the daily chart, and I'm just going to get rid of everything. If you don't know what a swing point is, I'll just spend just a moment on a swing point. And there are swing points where you see changes in trends. There are major swing points and minor swing points. And a major swing point would be something where you see a market moving down, moving into a consolidation and down. This is a major swing point here where you see a significant change in the market. This right up here, which happens to be October 27th, would be a major swing point as the market moves down. Right in here, November 25th would be a major swing point. And so any point where you see a significant shift in change in trend in the marketplace. So the December 19th is a major swing point. up here on the SPYs, April 2nd is a major swing point. The market moves down here into the April 10th area before it moves up into the, and here's the March 6th, April 23rd, I apologize, April 23rd. This happens to be the April 10th. Oh, that's March 6th right there. Now, along the way here, if you just take a look at this, and I'll blow this up, if you take a look at this, certainly there are changes in trends. And so these are swing points when you see a little change in trend. It's just the ones that we typically want to feed off of are the larger ones when we're taking a look at expansions and contractions. And we want to be aware of those numbers. So there is a tool that is on my system that allows me to immediately go ahead and measure both contractions and retracements among swing points. So hopefully you guys are able to see this. Now, I want you to understand that none of this is pre-done. And what I mean by that is I just simply decided to choose the SPYs. I wasn't really sure what I was going to choose out here. And if you take a look at the SPYs, so if we take a look at the price point that was put in here, and hopefully you can actually see these numbers on these lines here. The red lines, by the way, when you see a red line here, that's showing you a retracement or a contraction. And the blue lines are showing you expansions of swing points. And this is typically where I lose, folks. But I am committed to trying to find a way to be able to explain this so that folks understand it. And so here's another attempt at it. Now, this 0.382 retracement that's shown here, this 382 measurement is from this low, so it came off of the October 4th area. So from this low all the way up to the high that was put in on April, the high was put in on what, April the 3rd. Now I'm going to go ahead and delete this, and I'm going to use just the retracement ruler. So to understand how this tool works, what it's measuring, when it's measuring, and this says 0.382 to this swing point here, so to the low that came in on May 18th, which we know is an important low. When it's measuring that, to understand how that tool works, it's really from this low to the high, to the actual high that was put in there. And so I will go ahead and now use the retracement ruler here from this low to this high that was out here on April the 2nd, and what you'll see is 128.92. Now, the tool is set up so that it has a little bit of play in it. So it's not going to, even though you can say, Steve, the actual number is 128.92, that's absolutely correct. But in order to really, we're not about perfection and being right on the dot. I'm always amazed when it does work out like that, but it's still not a reason you're not looking for that type of accuracy. So there's a little bit of play there. So that's where the 1.2. Now, what we also noticed is between this swing point low and this swing point high. So this is from this low. Here's the lowest low, and I'm going up to the highest high in order to be able to measure what the retracement is between these two areas. Hopefully that visually is working for you. Now there's also there's a number of swing points out here, so I'm going to go ahead and delete this. There's a swing point from this low right here, April 10th. Market moved down, and then the market moved back up into its high here of May the 1st. Likely the last time that we'll see this high for several months. And so if we wanted to measure the expansion of this area here, I would start from this low to this high. And when I do that, what you'll see here is, we'll see what we see. And what you'll see is, so from this low to this high, the measurement happens to be 2.0. If I take a look at, and I didn't mention 2.0 as one of the numbers, and it's really not a Fibonacci number. That happens to be a Tom number. If I go from the March 6th low all the way up to the high here on April the 2nd, what you'll see is 129.51 happens to be 1.618. And the actual low is 129.55 on May the 18th. So this would be considered an expansion of swing points. So the retracements between this low and here's a 0.382, this number, here's a 0.618, here's a 0.786. And oftentimes when you get beyond a 0.786, you'll do an expansion of swing points. And why is that important to know? It's important to know because when you have a number of sacred geometry numbers that come together in the same spot, it's going to be an area of support or resistance for you. And if you're in the trade, you want to know that. You want to see if that area holds. and that may help you in your intraday trading or any other trading that you do. So if I go ahead and I put this back up on the screen here, and we take a look at all of the expansions or contractions between swing points, what you'll see is you'll see a 0.382, and then you'll see a 1.618 off of this swing point from March the 6th down here. You'll also see a 1.618. This one, as we know, measured 2. And you also have a 0.786 retracement off of a swing point coming back here into the December time frame. So we have a number of sacred geometry numbers coming together right here into this low. That tells us just how critical it is. Now, what I do expect is that is just the B point of the A to B equals CD down on the SPYs. And if the SPYs, and so we can measure where those areas are. If the SPYs, let's do this here. So if we take a look at the SPYs and where our, so even though we're in a long trade, let's take a look at what we're looking at from a short trade standpoint. We're looking at the SPYs to get up to the 134 level, potentially 137. 137 would be ideal because it would be a 0.618 retracement. And if we were to go back over here to this chart here and bring it down, even though it's a 30-minute chart, we're talking about 1344. And on the 1344 would 1344 on the SPYs. Where did I put that chart? Excuse me. That's not it. Oh, I think I cleared everything. That's what I did. Okay. Sorry about that. I wasn't paying attention. I'm going to put the SPY chart back up. Here we go. So 1344. So that's going to be that 0.382 area, 134.18 on the SPYs. It's possible that we'll get a, and if 134.18 is all that the SPYs get, and that is where we would go short. What I'm able to do with the this formation tool is I'm able to draw the ABC down to see where it is that we would go. And this only being a 0.382 would suggest that you'd get back to 114.67. So the interesting thing here is that should that be the case, that tells us that the market would be trading the next area that would trade into on its next leg down is into this November 25th area. Likewise, if the market moves up into the 0.618 area, I'm able to do just simply a quick A to B equals CD down, and that would take us more likely into the 125 to 121 area. That would take us into the next set of swing points around December 20th. But what I wanted to be able to do here is at least, because sometimes you will get a chart from me and you'll see it look like this, and you may not know really what all that gibberish looks like. It's really important gibberish with regard to being able to identify where you're going to see a market change in trend. And you may not always get a market change in trend. And if you don't, it tells you that the direction of the market is very strong. What you'll see here, and just take a look at the SPYs, just simply coming off of October 27th into the January 26th area, you'll see a 1.272 expansion. And what happened was the market simply retraced a little bit. And the retracement that it did was a 0.382 retracement off of the next set of swing points out there before it decided to continue moving higher. When all you do is a 0.382 retracement, it says you're in a real strong trending market. So that's why paying attention to this bounce that we get here, if it's only a 0.382 retracement, you know, we're in a very strong trending market, in which I suspect that we are to the downside. So with it being just a few minutes to 4 here, I thought I would just go ahead and open this floor up to questions, because it's usually at this stage when I start talking about sacred geometry and expansions and contractions where sometimes I lose folks. So are there any questions that you have? And you can always send me an email, as always, steve@tfnn.com, and you can always reach me by phone. But any questions out there on expansions or contractions? Well, then, based on no questions or answers, any questions on anything else? Perhaps I've thoroughly confused everybody out there. No, okay. So I'm just going to quickly take a look at the currency. And so 125.871 and it is above the 125,861. So that's a beautiful thing. And, well, thank you, Angie. I appreciate that. And, folks, have a great evening, and I'll look forward to speaking to you soon. And take care. Bye-bye now.